makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The UK Chancellor Jeremy Hunt is set to put personal tax cuts at the centre of his spring budget as a general election looms. We're live in Westminster. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. So first thing is first, let's take a look at the European markets map. But frankly, a lot of things going on moving these markets. One of the signals that we're looking out for the most is also the rally in gold and Bitcoin, which are basically giving conflicting messages about the strength and risk assets in the economy. Now, if you look at stocks, but also a lot of the bonds, they're actually posting some pretty small moves. The one thing we're watching out for is that testimony from Jay Powell. And then here in the UK, watch out for any movement in sterling and, of course, gilts on the back of the Chancellor giving that budget. So it's a big day for politics on both sides of the Atlantic. We'll bring you the latest on Trump and Biden's Super Tuesday sweep with Kriti Gupta in a moment. But let's start here in the UK with Lizzie Burden. As we build up to the budget, the Chancellor expected to give workers a 2 percentage point national insurance tax cut when he delivers his spring budget this lunchtime. Now, Jeremy Hunt under pressure to present a pre-election giveaway, but will also need to raise other taxes or cut spending to do so. So, Lizzie, what are we expecting from the Chancellor? What's his rabbit out of the hat moment?
Well, as you say, Francine, this is one of Jeremy Hunt's last chances to woo the electorate before the general election. So it's going to be a distinctly political budget. We're hearing that the expectation is he'll cut national insurance again, as he did in the autumn statement. You can hear them calling for a general election here in Westminster. But if he cuts national insurance, on the one hand, the thought is that it will be cheaper than income tax, it'll be less inflationary, and it will also help to incentivise people back into work because it only applies to people who are in jobs. However, if you give consumers back £10 billion, it's hard to imagine that it won't be at least to some degree inflationary and mean that the Bank of England at least has to keep rates higher for longer, if not hike again. That seems a bit unlikely. How is he going to pay for it? One measure could be that he ends the non-DOMS loophole, which currently means 70,000 people don't have to pay tax on their overseas earnings. That would have the added benefit of stealing one of Labour's ideas. And the big question really today is, will the bond vigilantes come for Jeremy Hunt like they did for Liz Truss? The reality is, as long as he does the dance with the Office for Budget Responsibility and lets them mark his homework, it looks like the markets could be pretty quiet. But let's see if he does anything egregious today, Francine.
Yeah, and let's see if anybody out there loses their voice at Westminster. There's some, pretty enthralled singing behind you, Lizzie Burden, there in Westminster. Now, we'll speak to you in a short while. President Joe Biden, Donald Trump have also swept the Super Tuesday state primaries. Meanwhile, the former president's remaining rival, Nikki Haley, scored her second win, this time in the state of Vermont. Well, let's bring in Bloomberg's Kriti Gupta. Kriti, when you look at, this election, it feels like Americans aren't really enthralled by it, certainly not enthused by it. And it looks like we're going to see a rematch despite so many billionaires giving money to Nikki Haley.
Yeah, Fran, no protesters in here, but I'm sure there's plenty on the other side of the Atlantic. Look, this is a really kind of tricky question when we're talking about financing in particular, and that's where Nikki Haley really matters here, where she has been out front in terms of getting a lot of backing, not just from grassroots conservatives, but from major Wall Street donors as well, who think that neither President Trump or President Biden are the right fit. But I think that's the exact point of it, that if she does end up dropping, the fact that there is this kind of neither is the right fit mentality across America is really where you're starting to see the polarization, especially as it applies to right here in Europe and what the policy actually looks like. And that's the campaign rhetoric that we're expecting to kind of amp up from President Trump, who, believe it or not, has actually had a fairly reserved approach relative to his last campaign, especially when it comes to things like tariffs around what that might actually look like for Europe. In addition to China, he's already mentioned that 60%. On the Biden side, it's a different story. He's using more of the carrot mentality than the stick mentality through kind of his Inflation Reduction Act, for example, EV incentives, really trying to bring production domestic similar to President Trump, but doing it in a very different way that is still angering some of his colleagues across the Atlantic.
Kriti, thanks so much. Kriti Gupta there with a thorough look at the elections. Now, to talk markets and how all of this plays into markets, of course, and treasuries, we're joined by Michael Strobaek, Chief Investment Officer at Lombard Odier. Michael, so good to have you back and in the studio in person to talk about all of the good or bad things happening in the markets. I mean, you still believe in U.S. exceptionalism, but we worry about deficits, we worry about the cost of money, and we worry about the U.S. actually just having too much on their hands. How do you play this still U.S. exceptionalism in the markets?
By betting on the U.S.
Which is doing great.
Which is doing great. And its exceptionalism has paid off very handsomely in markets. I mean, the U.S. is leading the charts on growth, on earnings, on tech. Productivity, on growth. Doesn't seem as if much has gone wrong for the Americans, but it's more fundamental than that. U.S. assets are sort of a strong core in today's global economy. Look at Europe, quite in sort of a perilous state, also because of the geopolitical uncertainty. China has materially slowed down, and the U.S. has held up the global economy coming out of two geopolitical shocks, the pandemic and now the war, and is showing little sign of weakness. It's actually showing sign of strength as we sit here.
So what does this tell you? I mean, I guess the question is it everything priced to perfection, right? Is valuations, especially in the U.S., because of all the good news that you lay out, at peak?
Well, it's certainly not cheap, but I don't think in this market valuation plays a lot of role in investors' thoughts. I think it's more about safety. I think it's more about quality. I think it's more about sort of sustainability of earnings. There's a lot of stuff out there that is very cheap, but it just keeps getting cheaper. At some point, maybe as rates start to go down, we'll see a broadening of the rally. But for now, it's really about focusing on the winning business models. That is tech, that is global firms, monopolies that sit on enormous pools of profits, and that's very much in the U.S.
But, Michael, overall, and I want to talk a little bit more about the U.S., given that we have the testimony of Jay Powell and also given that we have a big election year. But overall, the markets, you have a record high for Bitcoin. You have gold moving in the other direction. It seems to be a little bit jarring in how the markets look at risky assets.
Yes, that's quite sort of a conundrum to think about. But Bitcoin obviously is still the speculative element that we have here. We still have a system that is full of liquidity and where people are chasing returns. Gold is quite a different story, and I think of it still as somewhat of a hedge for large investors. Maybe right now people are piling into gold to stock up in as a physical asset. I think that's what's keeping it quite high. But on average, real rates, in our view, seem to have peaked and will be under pressure to go down a bit. That's normally good for gold.
So, Michael, in the U.S., what do you buy? I don't know whether it's fixed income or actually equities. Again, we have Jay Powell speaking today and tomorrow. But then you also have this U.S. election, and it's unclear. I know we're now focusing maybe more on policies, but it's unclear what a Trump in the White House would do for the Inflation Reduction Act and regulation.
So, number one, tech is unavoidable. We like communications sector services. We like stables in the U.S. and also, to some extent, energy stocks. Trump would probably be good for that. Treasury is absolutely. I mean, we are in an environment of very materially higher interest rates, short and long ones, than we have been used to for the last 10 years. And that is an opportunity. It's not a threat. Especially if, as maybe Mr. Powell may suggest today, that they are still on track. I think he will be quite sort of tempered. And I don't think he's going to be seen as pivoting again in some kind of direction.
What, in terms of being more aggressive with cuts? I mean, there was always this mismatch between the market's expectations in terms of the pace and actually what central banks, wanted to do. Yeah,
look, I think the rally that we've seen since October was really sparked by a pivot. It was sparked by the fact rates have peaked, they're coming down, inflation or disinflation is here to stay. I think they need to be very, very careful at this final stage of the battle against inflation, not move too fast, not get ahead of themselves, but balancing very carefully what the labor markets are doing.
It's like Goldilocks. It has to be just right. On the UK, Michael, are you excited? I mean, this is a very important budget for the Tories because we have an election looming.
Yes.
Does it matter to the markets?
I don't think so. To me, from what I'm reading, it looks like a smaller type deal. It can be undone by whoever wins the next election, and I don't think it matters a whole lot.
Michael, thank you so much. Michael Strobaek, their Chief Investment Officer at Lombard. Odier, of course, staying with us, and we'll talk a little bit about China next. Coming up, could the UK Chancellor be about to borrow policies from the opposition party to fund tax cuts? We'll get reaction from the shadow Chief Secretary to the Treasury next, and this is Bloomberg.
At a very high level in the UK at the moment. That's because on the back of the 400 billion that was spent during the pandemic supporting households and businesses, and then of course the extra help of 94 billion that was given after Putin's evil invasion of Ukraine, that has meant that there's been more public spending than anticipated. So you've got a high tax take, but I think what you'll hear today is the Chancellor take steps to reduce that further on top of the 2% that he cut in national insurance back in November. That came into effect on January the 6th. I think it's plausible that he'll do another 2% today.
Harriet Baldwin, their chair of the UK's Commons Treasury Committee, speaking to Bloomberg ahead of today's budget. Now, let's stick with this story. Jeremy Hunt expected to announce a 2 percentage point cut in national insurance. There's speculation that he may borrow some of opposition Labour policies to fund it. Well, our UK correspondent Lizzie Burden joins us live from Westminster with a guest. Lizzie, over to you.
Thanks, Francine. Well, I'm joined by Labour's Darren Jones. He's Shadow Chief Secretary to the Treasury. Darren, do lower taxes mean higher growth?
Well, first of all, we in the Labour Party have said for some time that the tax burden should come down on working people, irrespective of the growth assessment, because they're higher than they have been since the Second World War. But we've also got to get the economy back onto a trajectory of growth in order for those to be sustainably funded. Now, this will be the 22nd budget from the Conservatives since they came into office in 2010. And every single time, the Tories have said they're going to grow the economy. And where are we right now? We're in the middle of a recession. That's why growth is going to be at the centre of Labour's policies coming into the general election.
But everybody wants growth, so let's be absolutely clear. If the Tories cut national insurance again today, if, as we understand, they cut income tax down the line, and are you going to maintain those pledges?
So we support taxes coming down on working people. That's why we supported them in November. Let's see what the Chancellor sets out today. Now, it's right to say that if people have got a few extra quid in their pocket that they might spend, that might stimulate some economic growth. But the fact of the matter is that when people look at their tax bill, their mortgage or their rent, the cost of their bills and how much money they've got spare at the end of each month, even with the announcements that we expect to see in the budget today, we think that people will still be worse off and the cost of living will still be a real problem for people. So the idea that that will flow through to growing the economy when it's really just helping people kind of pay the bills, I think is probably unlikely.
Indeed, but the bond market's question to Labour is how you balance the books, right? If you maintain their tax pledges, how you continue your pledges on public spending. You've already had to scale back the £28 billion pledge on the green economy. So if you match what the Tories are doing, will you have to scale back your plans even further?
Well, look, we will inherit what we inherit if we win the election this year. We're very clear that if we do win the election, it'll be the worst fiscal inheritance that any party has had since the Second World War. That's the scale of the challenge. We can't really do anything about that from opposition. It's the Tories who are responsible for that damage.
Well, you can change your own plans.
And we can start to turn things around. Our manifesto and our policies will all be fully funded and fully costed in line with Rachel Reeves' fiscal rules, which is that we will not be borrowing for day-to-day spending and we will get debt falling as the size of the economy.
But are you confident that the market will believe you can be both tax cutters and public spenders?
Well, you've got to get the balance right. One of the big questions, of course, is reform. I mean, if you look at what we're spending money on, our public services, they're in enormous need for modernisation, for reform, for efficiency savings, both to try to get the public sector budget under control, but also to improve outcomes for people across the country. So we will invest when it's prudent and responsible to do so, but reform is going to be a huge part of our agenda for public services in order to get that balance right.
OK. It's a pretty bleak picture that you've just painted us of the UK economy, but actually, lots of CEOs that Bloomberg's been talking to are actually now pretty bullish on Britain. Our economists say that we could be top of the league table of the G7 when it comes to economic growth if people keep spending their savings. Are you just talking down the economy?
No, I'm just reflecting the facts that we see in the OBR forecasts, in the economic assessment of the country. That's not to deny that we still have huge assets, huge strengths as a country, huge opportunities for the future. But we know that when we speak to investors and businesses, for example, that they can't invest or pay for the things they want to because of other policy blockers, whether it's planning reform or the energy system or the labour market or the apprenticeship levy. There's a whole package of policies there that a government ought to be taking seriously to stimulate investment and growth. And for reasons I don't really understand, the Tories are failing to do that.
And when you're having your smoked salmon and scrambled eggs offensive wooing the city, what is it that you're promising them that you think they like?
Well, we think there are three things that we're saying to the private sector that Labour will bring. One is stability. The second is investment, and the third is reform.
Policies?
Well, the policies that flow under those themes. So stability is really important because, of course, I can't remember how many chancellors we've had now and how many times they've said tax rates are going to go up and go down. It keeps moving around because of the chaos in the Conservative Party. You will not get that from the Labour Party.
But we want specifics.
And our 5 missions, which are to grow the economy, to fix the National Health Service, to tackle crime and antisocial behaviour, to decarbonise the power sector by 2030, and to reform education and skills, will be the driving policies that will underpin that stability alongside our package of investment with the private sector and reform. OK,
Darren Jones, Shadow Chief Secretary of the Treasury. Thanks. I'm sure you'll be covering the budget for us later today. Back to you, Francine.
Lizzie, thank you so much. Lizzie Burden with Darren Jones. Now we'll have plenty more, of course, on the UK budget. We have special coverage, plus reaction and analysis. Our coverage begins at 12:15 p.m. with the Chancellor's speech at around 12:30. You can watch that in the UK on the terminal or follow our live blog on Bloomberg.com. And we'll be joined by John Strobaek and, of course, our very own Stephanie Flanders. Now, later today, we'll also be speaking to the Chancellor of the Exchequer, Jeremy Hunt. Don't miss that conversation this evening here on Bloomberg TV. Much more to come. Welcome back. Now still with us, Michael Strobaek, Chief Investment Officer at Lombard Odier. Michael, thank you so much for sticking around. Now, we talked quite extensively about the U.S., some of the opportunities there. I don't know what you do with China. I mean, you have you're a little bit different to everyone else who says we need stimulus. You say they need to be very cautious in what kind of stimulus, and actually they should focus on stability of the currency first.
Yeah. Look, so China is in quite a precarious situation. So growth materially has slowed down, and they don't seem willing or quite sort of grabbing the challenge of that growth by stimulus right now. I think it is driven by, as you say, stability. They don't want to be seen as having overdebted situations, default situations like we've seen. And finally, and this is my thinking of China in general, China is caught in this wind of change of the fracturing world, as we call it. Obviously, they're feeling strong headwinds from the U.S. In terms of maybe support for the war in Ukraine, or at least the tacit support. But more importantly, we're in a Cold War situation between the U.S. and China on tech. And I think they're taking stock of that before they go forcefully on stimulus. So I've taken out Chinese assets from our strategic portfolios, and we will look at it from a tactical perspective only.
But, Michael, so you also worry about deflation in China. Is China kind of on its own, or could it actually also impact, world inflation prices here?
It absolutely can. It may actually make the jobs slightly more easier for central banks outside China. But China into deflationary tendencies is not good in total. Maybe short term it will help a bit the central banks, but long term for sure China cannot end up in a deflationary scenario, which is not
because they're not consuming?
They are not consuming, they're saving, and they're not stimulating.
What's your take on Europe?
Caught in between, I would say, needs to stand on its own feet. Let's see what happens in the US. If Donald Trump comes back, Europe will feel a very strong cold wind to take responsibility for its own security and defense, show more commitment to, if you will, the US as well, by the way. And ultimately, I think the US election caught in between China is really Europe's moments of truth to look ahead 10 years and get its houses in order.
Are there any tactical plays? I know I had a big Wall Street bank saying actually they've identified 7 companies that should rival the Magnificent Seven, but that the share price is just not following through because they're based in Europe.
Yeah, sure. There are. I mean, there are fantastic companies in Europe. My home country, Denmark, has fantastic companies. Switzerland, very large companies with solid business models. Any sort of investor, I think, today needs to focus on a global business model, a monopoly-like situation, strong balance sheet and strong earnings. And there are some in Europe for sure.
Okay, Michael, thank you so much, as always, for coming on, especially coming in the studio. Michael Strobaek, their Chief Investment Officer at Lombard, Odier, with a good conversation around the world. Coming up, we'll look at London's environment for fintech startups as the city faces growing competition from Paris and New York. That is coming up shortly. Then we have a full roundup of some of the big market moves. One theme that we really want to talk on is record highs for Bitcoin and gold seem to be sending mixed messages about the appetite for risk across global markets. Now, Bitcoin has jumped 50%, of course, helped by inflows into recently minted U.S. exchange-traded funds. What that means longer term is something we need to keep an eye on. This is Bloomberg. Now, UK Chancellor Jeremy Hunt is set to put personal tax cuts at the center of his spring budget as the general election looms. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the new UK boss of Revolut said London's role as a fintech hub is under threat. With growing competition from Paris and New York, Francesca Corlesi has signed up to a new unicorn council to push the government on startup-friendly policies. Now, at the same time, a government-backed task force has called for investment in women-led ventures to drive the UK's ambition of becoming a tech superpower. Well, joining us now for more on all of this, on Budget Day as well, I should add, our city editor, Catherine Griffiths, and June Angelides, an investor at Samos Investments. So thank you both for joining us. Catherine, first of all, can you paint the picture of actually how, I mean, June lives this day in, day out. It's VCs, it's trying to raise money, giving women a better chance. But how does it feel actually for city people?
I think it feels in some ways positive. So Revolut has this new boss in the UK, Francesca Corlesi. She herself has been a founder before. She created a digital mortgage business called Mollo, and she's taken on this really, really interesting role at Revolut, running the UK business, which is right in the spotlight of whether or not they get the banking licence. And I think her kind of long experience, as she was saying, shows that London had this amazing kind of time after the financial crisis. There was this real sense that it was the place to be if you wanted to create new start-up banks. And that continued for a long time. And she's still really positive about London. She's very, very European. She's worked all over the world. But she does think that in the last few years, perhaps, there's been this sense of the talent pool diluting a little bit. There's New York, you know, kind of counterintuitively, we think of New York as being this huge finance centre. But in terms of fintech, that being a more recent thing. And then, of course, on the continent too, that sense of the Macron policies, or just that sense perhaps of whether people want to be inside the Eurozone. And of course, in London, we're not.
Yeah, we're certainly not. Juno, you live this day in, day out, and I know you've called for, first of all, more investment in women entrepreneurs, but also more angel investors. What's hard? Is it the access to capital when you start out?
Yeah, access to capital is a very, very big thing. I mean, if you look at the stats last year, funding dropped significantly to female founders. But in general, the landscape is very hard. But I think a few reforms that have been put into place recently, especially around pension, hopefully will enable businesses to access a larger pool of capital. And it's great for pensioners, because the money will be put to work.
Yeah, I mean, this is the British ISA that we were talking about. Yeah. I mean, there are complexities in that. Does the Chancellor go through with it?
In a few hours, we will definitely find out. Yes, I think probably we get something on the British ISA. And while the kind of name is jazzy, actually what that will really mean is maybe a bit more complicated, because it might be things that are listed in London, but of course that can be all sorts of things all around the world. But that plus some other reforms to sort of try and move pension fund money in particular into growth assets could create some opportunities for UK fintechs and other things too.
And June, what's interesting about what you've been trying to push for is also it's actually at education level. So it's inspiring girls, in the classroom to not only have role models, but I guess to have task force that will propel them in becoming high growth entrepreneurs.
Absolutely. I think the shocking statistic was that only 81% of students were able to name a role model in tech, and they were male. And I think how do we lift that number? A big objective of the task force is to increase that number, putting more material in school, especially with Women's Month. How do we raise the profile? I think the media really helps with that.
I mean, one of the questions that we try and often discuss on the UK show is actually what does the City of London stand for? And I know the Chancellor has always tried to push this idea that the UK can become the next NASDAQ, that actually he does want to focus on tech and entrepreneurship. But is it still insurance and banking?
Yeah, I mean, it is insurance and banking and professional services. But I think everyone can see that, the UK and London in particular is this incredible hub of talent. And that does stretch from tech to science, amazing universities, great campuses. But I think we've heard a lot of rhetoric from Jeremy Hunt, and he is pretty popular actually out there in the city, but really not a great deal of concrete action. And I think it's going to be really interesting to see how people feel about what is to come in the budget, and if indeed we do get the national insurance reduction and all the rest of it, whether actually people might prefer a bit more focus on these sorts of topics which sort of propel us into the future.
And, June, I mean, you have some great statistics, right? And, for example, there are some task force that this government wants to put in place. Now there's a general election. Doesn't look like they'll be around for much longer. I could be wrong. But that they really want to increase the number of female entrepreneurs. And, again, how difficult is that? We have a huge labor shortage in this country. So does that accelerate things?
Yeah, I think there are a lot of great initiatives being worked on. The government has put aside quite a big, significant amount of money to increase the amount of AI talent. Minister Caulfield recently spoke about a budget being put aside to help with returnships. I think we have a large untapped talent pool with women who have left the workforce for childcare and how to get them back in. I think training them up is a great way, but we also need the corporates to play a big role in making it an inclusive environment for them to join.
I mean, the other thing, so you also focus on coding for females, and actually for a lot of mums, but also females in general. I don't know the interplay between coding and AI. Is it more necessary to have coding skills with AI, or does that get taken away?
Well, I think AI and natural language has made it a lot easier to be able to understand. And I think what we need to see going forward is just people's interest, curiosity. I think that's what excites me about coding. How do we get people to think outside the box? How do we help them to understand the power to transform their ideas and make an impact in society?
We're all a little bit obsessed with Revolut because of the banking license and, what happens to this. Were you impressed by the plans going forward, or are so many still question marks?
Yeah, I think there are lots of question marks still. Revolut's been trying to get this banking licence for 3 years. But I think one of the sort of interesting dynamics of that is it's become so sort of big without the banking licence. It has 40 million customers around the world, 8 million of those in the UK. And, of course, not all of those people are using Revolut all the time, but it's still quite a large number. And so that decision by the UK regulators about giving them the licence, it's just a lot more loaded than when people get licences when they're a bit smaller, and the stakes are not quite so high. So I think they are showing signs that they are kind of ticking off their problems. They're sort of trying to get in control of their accounts and things like that. But, yes, questions still to be answered.
Catherine, you always have such a good, pulse of what the city wants. What are they expecting from the budget? I don't know whether it's a downbeat. I had a big investor in, and they were saying, look, the budget's fine, but they're probably not in charge in a couple of months, certainly, by the end of the year. So does it really matter to the people of the City of London?
I think that's the real challenge. I think they definitely, don't want to see anything rash. They don't want a sort of Kwarteng-style budget, and they don't expect to get one. But I think that's the problem. They don't really expect it to be a lasting thing.
June, is there anything that entrepreneurs need from the budget? Again, it's a bit precarious for this government right now.
I think in general what people are looking for is a bit more stability, just an understanding that the government is going to stick to the promise, a bit like what you've just said. How can they make plans if they're not certain about what it's going to look like in a few months from now? And back to that point of attracting talent, making the UK an attractive place so people come and they can access the talent they need to grow their businesses.
Yeah, it's a tricky, but I think it's the trickiest budget yet because they have to probably win votes. They don't have much money to play with, and they want to make sure that the markets are okay. Thank you so much for joining us today. June Angelides, investor at Samos Investments, and Bloomberg's city editor, Catherine Griffiths. Now, coming up, we're also joined by James Janoskey, the global co-head of energy, power and renewables at JPMorgan. He's live from the company's Clean Tech Stars Conference. So a good conversation on infrastructure and, of course, spending. This is Bloomberg. Well, oil supplies may be running ahead of demand after a report of rising U.S. stockpiles for a 6th week in a row. Fears of slowing demand from China and surging supply from non-OPEC producers are also weighing on prices. Brent has risen by almost 7% this year due to tensions in the Middle East and higher transport costs. Now, to discuss all of this, we're joined by James Janoskey, the global co-head of energy, power and renewables at JPMorgan. He joins us from the company's Clean Tech Stars Conference, which brings together the future leaders of decarbonization. So, James, thank you so much for joining us. I mean, one of the things that we keep on asking, a lot of our guests and a lot of head of commodities tell us, is that we're running out of things. And this is because there had been decades of underinvestment in oil and gas, but also in renewables. Do you worry that we're running out of things?
Good morning, Francine, and thank you very much again for having me join this morning. We're hosting our 2nd annual Clean Tech Stars Conference here at our offices in London. It's focused on private EMEA companies that are at the forefront of technologies that we need to achieve global net zero by 2050. As you think about your question, am I worried about running out? What we're worried about is making sure that we can help these companies get access to capital, because we need both. We need traditional energy, but we also need low carbon, green, renewables, clean tech. And the companies we have here, we have over 45 companies, the founders and management of these companies that are in hydrogen, e-fuels, battery storage, energy efficiency, carbon capture, the technologies that we need in addition to renewables and as we make the transition away from fossil fuels. So it's a combination.
But, James, is the right investment going to the right place? So, again, I understand it's a combination, but actually, what are you most worried about? And then you also hear from, again, a lot of the big commodity producers that even if you go through transition and go for renewables, there's not enough copper, there's not enough of these rare earths out there to make it viable in time.
So it's a combination of, we need a few things. We need public policy and regulation to help be stimulating for investments. We need permitting to move faster, but we also need access to capital for these companies to be able to develop the resources, develop the technology, spend on the innovation. So it's a combination. It's not just one element to make the transition successful.
Who's getting it right the most? Again, how many investments or how much in terms of money, a pool of money, needs to go where?
I think what's encouraging is if we look at last year, we $1.4 trillion of capital for energy transition, decarbonization, which is a record. The challenge we have is to scale that up to the $4 to $7 trillion a year that we're going to need between now and 2050. We've had some headwinds, obviously, with high interest rate environments, energy supply shocks. We've had supply chain disruptions, permitting being a bit slow. So it hasn't stopped. It's going slower than what everyone would like. As we saw the attendance at COP28 and then even at Davos, there's a lot of momentum for this from the corporate and the private world, public. So we're confident it's going to come. We just have to have a little bit more patience as this evolves over the next few years. And this, to change the global energy ecosystem, to make sure that we have the ability to scale up the low carbon is going to take time. It's not an overnight event.
James, I know there's a lot of focus, of course, on raising capital to go into infrastructure for renewables or infrastructure for energy. Is this where the smart money is going?
The smart money is going across, so we continue to see capital being raised across all subsectors, renewables, so solar, wind, the grids, battery storage, EVs, clean fuels, as I said, some of the more emerging technologies. Capital's continuing to go. The issue is just because of what's happened for the reasons I said about some of the headwinds we faced last year, it's just slowed down the pace of capital coming. We went from 30 companies last year to 45 companies this year at our conference. We went from roughly 200 plus investors last year to 250 plus this year. That's, to us, quite encouraging that we continue to see companies grow, be successful, but investor interest be there from, as you said, venture capital, private equity, it's infrastructure, it's a combination. I think the other thing we're seeing is the big corporates and the big strategics are also continuing to put more and more capital into helping these clean type companies or these smaller type companies grow up so that they can scale up and also deploy their technology quicker.
James, when you look at, your basically the teams joining you at this conference today, I think you have growth companies, highly successful growth companies that raised some $7 billion of capital over the last several years. Is it easy to raise capital across the board, or is there a region that actually is more in tune to raising capital in this space?
So what we're seeing right now is it is quite challenging. I think globally, for the reasons I said, but we're starting to see the green shoots. We're starting to see the public equity capital markets open up, which is always a good thing. We've seen policy in the U.S. with IRA obviously be supportive. We've seen the UK and EU adopt new policies and new incentives and subsidies. I wouldn't say it's one specific region. What it is it comes down to companies that are able to demonstrate that they have the technology, that they're beyond the pilot phase, they're scaling up to be commercial, and that they have an end market demand, and that those companies then are able to go and say, you know what, I would like my next round, whatever that is, a C round, a D round, an E round of growth capital, because I've proven, and there is demand, there's fiscal policy around it. Those elements are really just global. So it's not one region, it's quite specific. Yeah. But overall, the fact that we saw more capital raised last year gives us a lot of encouragement, and the momentum just in the market that we see talking to clients and investors is quite encouraging.
Great. Thank you so much. James Janoskey, they're the Global Co-Head of Energy, Power and Renewables at JPMorgan. Now, coming up, as the UK Chancellor prepares to deliver his spring budget, we'll look at why gilt investors will be hoping the whole statement is actually uneventful. That's next, and this is Bloomberg. So just a few hours until the final UK government budget before the election, but could disappointment for voters turn out to be a bonus for gilt markets? Well, Bloomberg's markets reporter Justina Lee is with us now. I mean, the UK, this is a very important budget, frankly, for the Tories. I don't know whether it'll have a huge impact on the economy given the looming election, but what are you expecting, Justina?
Yeah, I think the biggest headline, for all of us living in the UK has already been reported out in the press, which is that everyone's expecting a cut to the national insurance tax rate. And perhaps not yet, a cut to the income tax rate. But I think that's going to be a really important part of the pitch that the Tories are going to desperately bring to UK voters ahead of a potential election. But, it's kind of a difficult kind of dilemma for Jeremy Hunt here, because on the one hand, I mean, they do kind of want to bring more perks to to UK voters. But on the other, he's not working with a lot of fiscal headroom here. So we're also going to try to see where he's going to find some of that headroom, potentially by extending a windfall tax, kind of on the energy companies and kind of what he's going to do with the tobacco tax and kind of other parts of the budget.
So how is the market positioned ahead of that?
Yeah, I think kind of another big picture structural question here is there going to be more perks for kind of the UK financial industry in particular? Because obviously going into this budget, there have been a lot of concerns about the lack of listings in the UK and also the lack of domestic investment in the domestic economy. And so there have been kind of a lot of chatter about whether there's going to be a British ISA, which could bring some tax perks just specifically for investing in domestic stocks. And that could, at least in the long run, provide some support for British stocks.
Now, Justina, one of the most read stories on the Bloomberg terminal is actually Egypt and the fact that they devalued their currency. What can you tell us?
Yeah, I think it kind of all speaks to the pressures that emerging markets are under at the moment. And for Egypt, it's been particularly difficult because they've seen kind of a deficit in their current account for quite a while, and that always brings pressure to the currency. But it's also been especially hard because with the conflict in the Middle East, I mean, that's hurt kind of trade in Red Sea and revenues through the Suez Canal. And so what we kind of got from the central bank today is, a huge rate hike of 600 basis points, as well as the devaluation of the currency, which kind of will bring it a bit closer to the black market rate. And also economists are expecting potentially a deal with the IMF coming kind of very soon.
Yeah, and we heard from the IMF that they were encouraging, of course, to tighten monetary policy because inflation is around 30%.
Yeah, exactly. And I think part of that is kind of a global story, which is that with the rate hike coming out of the U.S., a lot of kind of capital has left emerging markets. And I think this is a particular kind of dire case, but it's definitely the pressure that a lot of developing countries are seeing right now.
And then just, we're watching out for China and possible new policy coming from there.
Yeah, I mean, speaking of emerging markets, right? I mean, investors were a bit disappointed yesterday because even though the GDP target has been kind of similar, at 5%. I think a lot of people were hoping for a lot more detail about the plan to get there. And we still didn't really get a lot of that detail today. I mean, apart from, the central bank governor saying that there could be more room for another, reserve requirement ratio cut, which is why we're seeing Chinese bonds rally today. And, also another ultra long central government bond sale to support development. But I think, people kind of are a bit skeptical after the lack of support that we've seen over the past year.
Justina, thank you so much, as always, for that wonderful Markets Roundup, Justina Lee. Now, another reminder for viewers in the UK, you can join us later for special coverage of the spring budget, beginning at 12:15 p.m. The Chancellor's speech is then scheduled for around 12:30. Now, later today, we'll also be talking to the Chancellor of the Exchequer. Don't miss that conversation right here this evening on Bloomberg TV. Up next, though, Bloomberg Brief with Danny Berger and Manus Krani in New York. Have a great day, everyone.